Hello, everybody. So today I just want to cover the broad market and just the technicals on there. And today is February 28th. It's the last day of the month. So let's get started with the S&P 500 SPY. So I'm just going to look on the one-year chart. You can see that we have this very clear downtrend. So it's not necessarily a good idea to be getting bullish yet. Because I mean, we've spent a fair amount of time under the 200-day moving average. So first we flirted with the 200-day moving average right here in late January. We got below it, we made it above, and then we made this lower high right here. And now we've been under the 200-day moving average for almost 2 weeks now since this move right here. And you can see that we kind of rejected. So now we're on our way to making a lower high. But the question here is, where is this going to drop off to? Or are we actually just going to continue up and break through this downtrend right here? So ultimately, what I see as big resistance is definitely going to be this 200-day moving average right here around 445.12. And what I also want to note is that we've been having a lot of resistance right around this 438 level recently. So just looking on the day, you can kind of see that we rejected right there. We had a pretty nasty sell-off. And then at the very end of the day, we bounced. And later on in the video, I'll explain the culprit to why I think we bounced. So overall on SPY, I mean, be cautious. This could just end up being a lower high, and we could just reject and possibly retest these low areas around 410. But ultimately, we want to hold up on this 420. So definitely just keep in mind there's a lot of risk here. Now, going on to the NASDAQ, we see something pretty similar. So downtrend. And we have a little bit left to hit the top of this top trend line. So, I mean, we still don't know. You know, we could be making a lower high here, and then we could just go straight down. So there's a lot of bad things going on in the news. So the area that I would want to hold up here is probably, we don't want to take out this wick right here. So that's around 434 right there. So if we fall below this level at any point, then you could expect that we could be retesting these lows of last Thursday. And then also another thing to note, this 50-day moving average is curling down. It looks like it wants to go underneath this 200-day moving average. And let's just see how long we've been under the 200-day moving average. So you could say we've basically been under the 200-day for a little over a month. I mean, we came up right here very briefly, but in the broad scheme of things, it's been over a month. Now, let's look at the Dow Jones. Dow Jones has definitely been the safest of all the indices. You can see very similar situation here. We've been under the 200-day for actually not very long here, so probably about 2 weeks also. So similar with SPY. And we have a little bit of wiggle room before we hit this top trend line. So same deal. We got this 50-day curling down, and we don't know if we're just going to break out or if we're going to fall lower and make that lower high. Now let's look at the IWM. Now I think the IWM is pretty interesting because let's go back and look at all the indices. We're down, slightly up, we're down, and we're slightly up. So if we're looking at these four indices, the IWM actually outperformed. So when we look right here, we're pretty close to that resistance. We actually rejected this trend line right here. But ultimately, I mean, look at the 50-day. The 50-day has come down so much. I mean, when this 200-day started creeping up here, and we had this massive move here, right before this massive move, I was getting really nervous because our current price action was so close to the 200-day. I thought two things were going to happen right around here. We are either just going to tank or we are going to gap up and then we're just going to continuously break out. And I was wrong on both ends. So we did gap up to make some distance from that 200-day moving average, but it was really only to come crashing down. So now we see that this 200-day moving average is just above all these other moving averages. So we've got the full bear trend. But also another thing to note, this 50-day moving average right here is at 208.25. So we're really only 3% away, or pretty close to 3% away from being above the 50-day moving average on the IWM. So I wouldn't be getting too bearish on IWM, but like I said, we got the full bear trend. So, I mean, don't be too bearish or bullish. Now you can see that recently we basically double bottomed here right around 187.77. So be cautious on IWM as well, but keep in mind we're not too far away from the 50-day. Now Facebook, I'm just going to take away the moving averages here for a bit. Now I want to point out that I have this long-term trend line on Facebook. You can see it's catching quite a bit of data here, but I also have this little trend line. I like to call this the crash catcher. You can see here in 2018, it caught that crash, caught this 2020 crash, and what do you know, we actually bounced off it again right here around 190. So to me, I think Facebook could move between this trend channel I have drawn here. And ideally, we would want Facebook to be above this channel. But I mean, if we're moving up in this trend channel, that's fine too. I mean, Facebook has a lot of problems going on with it now. And I do believe firmly that some of the sell-off was justified. But as you could tell, we bounced off this crash trend line, and there is a lot of potential for this to go back up. So if I'm introducing these moving averages again, we go on the yearly, you can see things don't look too good. I mean, there is a gap to fill all the way up here around 245, and the shorter term gap right around 218. So if we break past this 218 level, I mean, we could see a pretty significant move up. But of course, the overall market will have to have better sentiment going on. And then let's look at the weekly chart. So on the weekly, we finally printed this bullish candle right here. We've just been having one after another red candles. Now let's just go into the max. Yeah, the monthly doesn't look too good. Just one massive red candle right down there. Full disclosure, I am buying Facebook. I do like it around these levels. And I'm not telling you to go and buy right now. I'm actually, I actually recognize a lot of the reasons why people might be afraid to buy Facebook. And maybe I'll go over the financials in another video in the future. So moving on, we look at Apple. Now, this is where some of the most interesting things happen on Apple because Apple has such a big portion in the major ETFs and just the major indices in general. So um, that that huge rally we had on SPY at the end of the day, I would blame this on Apple. So let's look at the 1 year. Notice here, we were about to break the 100-day moving average today. Actually, it was about 30 minutes before the market closed. Apple was actually under the 100-day moving average, which is right around 163.15. I know that's kind of hard to see because it's yellow, but let's go to the actual price movement on the day. So you can see people realize, oh shoot, we're going to close under the 100-day moving average. And then they just gapped Apple up so much. And then now it's at 165. And this was literally like 20 minutes before market close. They just gapped it up so that we make it back above the 100-day moving average. So crazy stuff. I mean, be careful. Always keep in mind the moving averages on Apple. I mean, you could just see right here, you know, we had that massive green day where we went all the way from the 200-day basically to the 100-day. So Apple is still pretty bullish. I mean, you do have this 50-day curling down, and we are below the 50-day, but out of all the Faang names, it's definitely the strongest because most of these Faang names are actually under the 200-day moving average. So I do have, when I zoom out, I do have this massive trend channel on Apple that goes back several years. So I could actually extend this out a little bit to go back a few more years, but basically, if we're looking at the bottom of this trend channel, it's about like that 154 area. So I mean, I think Apple around that price is pretty good, but not telling you to buy. I mean, you can if you want. Definitely, I think a buy would be around the 200-day moving average. As you can see, a lot of buyers stepped in. Now, let's go on Amazon. So with Amazon, I just want to point out this channel. So we've just been in this channel for the majority of 2020 and 2022, or 2021. And then we eventually just broke down here. You can see this massive breakdown. And then it looked like we were going to go back into that channel after that earnings, but you can see that we're having some weakness here. Let's just go on the 1 year. We're still way below this 200-day moving average at around 3,360. You can see we have this curling 20-day moving average. We're still, we're above it, ever so slightly above it, about $10 above. So now we might be moving it within this range between the 50-day moving average right here at 3,165 and the 20-day moving average at 3,061. So definitely look for just this bounce up here. See if we get rejected right around here. Now Netflix. So Netflix is kind of like Facebook. It's got this crash catcher. So you can see this trend line actually goes all the way back to 2015. And it's a pretty good trend line in my opinion. I mean, you can see it catches that move, catches that move, catches the top of that, catches the top of that, catches the bottom of this wick, catches this price action, and then we got very far away from it. So now we're kind of reverting back to this trend line, and you can see it even caught that. I mean, it made sense that when we did crash on Netflix, that we fell right here. I mean, you know, sometimes you don't realize these things until it happens. Now, had I saw this earlier, I would have said, oh, that's definitely a buy right there. So I'm looking at this and we could just be moving back and forth. Who knows? But right now, I do feel pretty good about this trend line right here. It's been catching a lot of the crashing price action. Let's introduce the moving averages. So it wouldn't surprise me if Netflix reclaimed the 200-day, just because, I mean, if we look right here, we're starting to flatten out a little bit. So a lot of the selling has subsided. So, I mean, to get back above the 200-day, we need to be at 427. So when the market conditions are better, I do think we could get there. Google. So what I want to point out on Google is that we've been in this new trend channel for the beginning of the crash in 2020. And we've been moving predictably back and forth within this channel. And then the old trend channel was moving in this direction. So you know what? If we do crash on Google, it wouldn't surprise me if we got back into this old trend channel. But as of now, we are actually not too far away from getting back into the current trend channel. You can see we've been under the 200-day moving average. We've kind of flirted with it right here, back in those January lows. And then we shot up on the split news and the earnings. And then this quickly sold off. A lot of people were trying to get out just because the macro is so bad. And then now we finally trying to make it back above that 200-day. But you can also see that this 50-day moving average is curling down. So, I mean, we don't have a whole lot to get above the 50-day moving average. So maybe we can avoid this curling under. So this is definitely something to look out for. If this 50-day curls under that 200-day, I wouldn't think it'd be too good for us. So I want to see us back over this trend channel and over the 200-day moving average. Then now I want to talk about gold. So gold's been holding up pretty well. So if we zoom out a little bit on gold, you can see not too long ago we broke out of this wedge, and you can kind of see right here we've had a lot of buying volume, but we've also had a lot of selling volume here too. You can see that wick that we drew out. So definitely resistance right around here at 183.72, and there's we're basically right on support right around this 178. I guess that's resistance now. Yeah, that's going to be resistance, 178.85. So in my opinion, gold might be trading within this range right here from 175 to 178.80. If we see gold going above 178.80 again, then maybe we could be moving back within this range right here. So gold looks pretty bullish. You can see all these moving averages are curling up, and they're above the 200-day. So for me to feel a little bit better, I would want to see gold breaking underneath this 175 area. And then I would think that people are running out of gold to go buy cheap stocks. So now let's look at the VIX. Now when we zoom out on the VIX, you can kind of see that we're drawing out this bull right here. So just looking on the 1 year, VIX looks pretty bullish. I mean, 200 days all the way down here, all these moving averages are above the 200-day, and we closed right about 30.15. So if we start moving above this 31.80 area, then things could get really rocky, and we could start moving between 31.80 and 38. But right now, there's a good chance we could be moving back and forth between this 27 and 31 region. So definitely look at the VIX, and definitely be cautious when we get over 31.73 here. So that's my broad view, technical analysis on the market, and I hope you guys enjoyed.